Hey Crypto Wizards, Sean here, and the futures contracts have landed. Thank you, Chicago Board Options Exchange. That's right. As of today, you can buy futures, meaning that you can make money if the Bitcoin price goes up and you can make money if the Bitcoin price goes down. And in this video, what we want to cover is number one, what is a futures contract, and more specifically, a Bitcoin futures contract? And number two, what does it mean for Bitcoin and cryptocurrencies in general? So let's get into it. So number one, what is a futures contract? Well, let's explain it like this and say that you're a farmer and you get really tired of seeing the market price of the corn that you grow changing and fluctuating and being unpredictable. So some years you're making money, some years you're losing money, you're tearing your hair out, you don't know what to do about it. And somebody says to you, okay, I'll tell you what, let's agree a certain price at a future date that you can sell your corn to me at. So if the market price goes up or down, you have peace of mind that you can sell your corn to me at that price. So you think about it and you decide, yeah, that's not a bad idea. And you enter into that contract. Well, my friends, you have entered into a futures contract. So a futures contract is nothing more than agreeing to sell or purchase an underlying asset at a specific price at a determined date in the future under a legally binding contract. Now, how does this work with Bitcoin? Because the Chicago Board Options Exchange and the Chicago Mercantile Exchange, who will also soon be doing Bitcoin futures contracts, are no small deal. These are regulated exchanges. They aren't actually buying Bitcoin. Bitcoin is still, out there in the cryptocurrency realm. So how is this even possible? Well, they are tracking what is known as the Bitcoin reference rate and allowing institutional investors and retail investors to trade the actual futures contracts themselves and settle them as cash rather than Bitcoin. What does that even mean? Well, what it means is that when you're entering into these futures contracts, you can make money if the price of Bitcoin goes up or down, but you never actually own Bitcoin. So one of the misconceptions is that all these institutional investors are going to control Bitcoin. They don't even own Bitcoin when they're entering into the futures contracts. But that doesn't mean it's not good for Bitcoin and cryptocurrencies in general, which we're going to come on to. Now, if you can buy a contract to sell Bitcoin to me at a specific price by a determined date in the future, and the price moves in your favor, then the contract value becomes worth more. So it becomes worth more, and therefore you can sell the contract. So what you're doing is you're trading the contracts themselves, not actually the Bitcoin. Okay, so let's take an example. Let's say that you agree to buy Bitcoin at $15,000 at 1 month from now. And $15,000 is the price of Bitcoin today. Well, first of all, you're not actually buying Bitcoin today. What you're doing is buying a contract. And what you pay for that contract is only a deposit. That's right. You are actually using leverage when it comes to futures. And this is one of the big advantages. It would be about 30% with the CBOE, so $4,500 to enter into that contract. So you will make the same amount of money as though you owned one Bitcoin. And you haven't had to fork out 15 grand on, say, the Coinbase exchange and paying some kind of credit card fees and all that stuff. You've bypassed all of that. Now, you don't own Bitcoin, but you do own the contract through a regulated exchange. Now, I'm sure you're starting to see the benefits of this. So let's say we enter into that contract and the price of Bitcoin goes up to, $16,000. Well, you've made $1,000 and it cost you 4.5 grand to get into the contract. Now, that 4.5 grand was just a deposit, so you haven't actually given up that money, and you've made $1,000. Now, if it goes to 16,000 and you exit out of that contract by placing the opposite trade, then you are in and out of the trade before the contract even expired. You're out of the contract and you've made that money. So what is the cost to you? Well, it's the broker fee, really, which is about 50 cents a contract. Not very much, right? So it's much easier to trade and speculate on the price of Bitcoin. And you can also do it the opposite way around if you are speculating that the price of Bitcoin will go down. So you can be in and out of transactions pretty quickly based on the price fluctuations of Bitcoin without even owning it or worrying about the exchanges and storing it and wallets, etc. All of that just goes out the window. Now you might be saying, well, this sounds really, really great, but what are the downsides? Well, the downside is that you don't own Bitcoin, so you can't exchange those contracts for other cryptocurrencies. You might also be saying, well, hang on a second, then all these institutional investors who are experienced at trading are now going to take control of Bitcoin and it's becoming more centralized. And no, remember, you don't own Bitcoin. Anybody who's trading with Bitcoin futures contracts isn't actually directly buying Bitcoin. So what does that mean? Well, what does it mean for Bitcoin in general? Well, in my opinion, it's a really good thing because now you have the exchanges such as Itbit or Kraken or GDAX, for example, who are part of the Bitcoin reference rate. And they are now going to have more pressure on them to operate ethically and responsibly. And therefore, I think in general, things like the miners will also have that pressure starting to move towards them. And this is really good. So it doesn't mean that institutional ownership is going to take over on Bitcoin. It just means that there are other ways you can now trade Bitcoin and other people and other interests who are taking Bitcoin and therefore cryptocurrencies seriously. One other very important point to note when it comes to trading Bitcoin futures is that they are settled in cash US dollars. Like I said before, no Bitcoin is ever transacted on these Bitcoin futures exchanges. So another disadvantage to futures contracts are they are more complicated than just say buying a stock. And you can lose a lot of money very quickly if you don't know what you're doing. So remember, if you do go into buying futures contracts, whether you're going long or short, always remember to put something in like a stop loss so that you know how much you're set to lose before you even get into the contract. And remember, I'm not here to give you investment advice. You might also be wondering, where can I actually trade these futures contracts, Sean? Come on. Well, the two brokers that I'd recommend, and it's only because I've used them, is Interactive Brokers and TradeStation. I am not paid to recommend them. If I could pick one of the two, I would definitely go for Interactive Brokers because they're the most cost effective, and frankly, I believe their execution is the best, is the far superior out of all the other brokers, and they also use them for trading stocks, etc. too. So Interactive Brokers is the way that I would go if I was you. If you can't afford their deposit sizes, then TradeStation is also really, really, really good. So go with TradeStation if you can too. Now, if you want to know more about Bitcoin futures contracts in specifics, then check out the next video because we compare the CBOE with the CME and we look at a real example on a chart of how much profit and loss you would make depending on what contract you buy, etc. Help yourself get educated on that video. If you want to know more about trading in general and trading on cryptocurrencies, buy and hold investing, altcoins, then hit subscribe and the bell button because I'm actually investing my own money in altcoins right now and sharing with you which ones that I'm buying and why. So you might be interested in that too. But other than that, if you found this video helpful, remember to share it. Help people get educated because the flow of wealth will typically go from people who are not in the know to people who are in the know. So stay educated, help your friends and family stay educated by sharing this video, and until then, talk soon.